We talk about OPEC. In what context does OPEC matter over the next few decades?
OPEC still has a major role here. OPEC counts for more than 40% of oil production. It counts for more than 70% of oil reserves. And OPEC has shown over the last year it has the ability to stabilise the market. One of the big messages from last year's data, I think, is the OPEC production cuts work. They hit their production cuts, so they indeed exceeded it. And as a result of which, inventories have come back down to more normal levels, exactly what they were trying to do.
It just seems like in the broader sense of the energy market, it feels like Exxon is one of the only majors that are really doubling down on oil. BP, Total, Shell, Statoil, now transitioned its name to Equinor, is looking at renewable energies, looking at gas. When you did your review, what's going to be the power mix going forward?
So there's an energy transition going on. We're seeing very strong growth in renewable energy, wind and solar, strong growth particularly in natural gas. But one of the messages, both from the statistical review and from BP's energy outlook, is energy transitions take a long time. The world is likely to consume significant amounts of oil and significant amounts of natural gas for many, many decades to come.
So when we talk about a supply gap that's coming, when would that be coming? Because one of the bearish indicators for oil is like, well, we got peak demand coming, so I'm out. I don't want to invest for 30 years in that $20 billion project.
So my view on peak oil demand is I don't know and I don't care. I don't know when it's going to happen because, frankly, I can tell you different assumptions by pace of vehicle efficiency, the strength of growth in China, a whole myriad of different things, and they can change that timing by 10 or 15 years. That's why I don't know. I don't care because even when oil demand stops growing, it is unlikely to fall back very sharply. To give you a sort of simple rule of thumb, in a range of scenarios I can see, even some consistent with a 2-degree scenario, you get oil demand somewhere between 85 million barrels a day and 110 million barrels a day in 2040. If the world stopped investing in oil today, and we just allowed declines to take place, it would only be able to produce about 40 or 45 million barrels a day of oil. The world will need huge investments in oil for many, many decades to come.
And you wonder also, will they have a lot of investments, say, in coal? This is a great chart that shows the different regions of the world and how the different energy and power mix went into that. And what struck me is that coal, for example, is still a huge part, not only in China, but also in India. And renewables, though good in China, but a much smaller fraction in areas like the Middle East. Walk me through these projections.
Yeah, so there's both projections, but I think actually even not even projections, just in terms of today's data, the share of coal in the global power market today, in 2017, was 38%. Guess what the share was 20 years ago in 1998? It was 38%. The share of coal in the global power sector has not changed.
I thought coal was dying. I thought the plants were retiring, all of that was going.
And this is one of the messages from this year's statistical review. Huge pressure to try and move away from coal. The share of non-fossil fuels in the power sector has actually declined over the last 20 years a touch. Massive growth in renewable energy, but at the same time, nuclear energy and to a lesser extent hydro has declined. We know the power sector really matters. It absorbs about 40% of energy. It emits most carbon emissions of any sector in the world or in the economy. We know from countless studies it's a sector where we may need to make most progress if we're going to hit the Paris climate goals, and we've made precisely zero progress in the last 20 years. So one of the messages from BP's statistical review this year is sort of a wake-up call that we need to push harder and harder in the power sector.
But the growth is elsewhere. I mean, coal's percentage of power might not have changed, but the growth, say, in renewables has been, astronomical in some respects.
Yeah, extraordinarily strong growth. So renewable energy this year accounted for almost half of the growth in power generation in 2017. So strong growth in the overall, in the growth rate, but those shares take a long time to shift. And also last year, although renewables counted for almost 50%, coal counted for around 40% of the growth of last year. And this is different parts of the world. Coal demand in the US power sector fell last year. What we saw, though, was increasing coal demand in fast-growing, developing economies, China, particularly India. The growth of coal consumption in India accounted for around 3/4 of the growth of global coal last year.
Well, I'm glad you brought up India, because if you're an energy company and you're looking at where do I invest now for the next 30 years, you're looking at China and you're looking at India for where the demand energy growth is. What kind?
I think it'd be a mix. In India, what you're seeing is strong growth in coal and also strong growth in renewable energy as well. Natural gas playing some role, but playing less of a role there. China in a different position. They're gradually easing away from coal. Coal consumption increased in China this year slightly, but that follows 3 big falls in coal consumption in China. What's growing strongly in China? Renewable energy, but also natural gas.
Yeah.
There was a surge in gas demand in China last year. Gas demand in China grew by over 15% last year, accounting for around a third of the world's total increase in gas consumption. And that was a coal to gas switching story. Environmental policies encouraging industry and households to stop using coal and use natural gas because of the huge benefits that has both to the environment, air quality, as well as overall carbon emissions.
Which you bring up a really good point to tie it back to recent news. And in the recent tariffs that came up, what was ignored from China on their tariffs on U.S. Imports was LNG. It was natural gas. They said we're going to tax gas coming on pipelines, but no U.S. gas is going to come on a pipeline to China. Do you think that was a mistake, or is it really speaking to the trend that you noticed in your statistical report?
LNG is growing extraordinarily strongly. It grew by over 10% last year. That's the strongest growth we've seen for 7 or 8 years in liquefied natural gas. China's increase of LNG imports last year accounted for about half of global increase in LNG. China overtook Korea to be the world's 2nd largest import market for LNG, second only to Japan. China's demand for gas is likely to grow very substantially over the next decades. Some of that will come through some pipelines from Central Asia. The vast majority will come through LNG imports. And US is one of the world's major exporters of that LNG.